then if you go to today's problem, and this is everything's in the modules link, we're going to do the same thing we've been doing, but now we're going to bring that 10-column worksheet back. Now, just be advised that I know the worksheet is, really big and it's hard to put it all on one screen at the same time. So just know that if you get behind or you'd rather just listen rather than try and do all the calculations on your own, I do post these files. Usually Sandra and Giselle post them, but since they're on some academic trips today and so forth, I'll make sure that I post them. So if you can't keep up in class or you would rather just listen as opposed to write, I will be posting these files today at the end of class. They're always in the discussions area. I think it says something like class contributions from lecture. And by the way, you guys are all welcome to post things also. So if you took a good set of notes, or if you outline the chapter and you want to share that with someone, you guys can feel free to post there. The only thing I don't want you posting are answers to homework questions, because that would not be cool. All right, so I gave you guys on the Excel spreadsheet, I gave you the problem wording, and then I gave you this 10-column worksheet. And so right before class, I went over and I copied as best I could to copy these line items at the bottom over, so I wouldn't have to keep flipping pages for you. All right, so let's see. Whatnot is a retail seller of cards, novelty items, and business products. So think of like a Hallmark store in your head. They give you the general ledger amounts, and here's what they want you to do: complete the worksheet. Well, let's go back and refresh our memory on what a worksheet is. A worksheet is an internal tool that we use to pull together all the adjusting data and put it all in one place so that we can get a preview of what the financial statements are going to look like prior to actually formally doing them. So we did this in chapter 5. The worksheet concept is not new. But what's happening now is because of all the other things that we learned, it's going to be a lot longer with a lot more going on. So in the interest of time, what I did is I went in and I filled in the debits and credits that they gave us, and I totaled it up at the bottom. And you would be expected to be able to do something like that. I started us off in the interest of time. And our goal is, remember, if we do this correctly, the two net incomes at the bottom better balance each other out. We spent 100% of the last class talking about all these adjusting entries. We went through examples of each one, and then we tried a fairly difficult homework problem. And so now we're going to do the same thing, but we're going to complete it on a worksheet instead. So let me move this over so we can all see it. First one. Inventory on hand was $15,840. You notice how they called it letter A and B, because we learned last time why we do this in 2 steps. You guys remember the name of the steps? Anybody? We called it take out the old, put in the new, right? So I'm going to go isolate this inventory line item so you guys can see it here. We're working on the inventory line. And so we're going to do 2 things. We're going to take out the old and put in the new. So here's this $16,985 that I need to get rid of. So I'm going to put letter A up here. And because inventory is an asset that has a debit balance, I'm going to credit it to get rid of it. $16,985. And the offset, and again, I know this is hard to read. If I make it bigger, you just won't be able to see as much of the worksheet. So I can try a little bit. Remember, I'm posting this after class. The offset is to that junk drawer account that we learned about way back in chapter 6. It was called income summary. So I'm going to go down here and I'm going to find income summary for the same amount. I'm going to go grab it so I don't transpose a number, which I'm absolutely famous for doing. Didn't grab it. Let me try it one more time. Equals. Let me click and press enter. And now we've done half the entry. We've taken out the old. So if you missed that, we debited income summary and we credited the inventory account. And now there's 0 in inventory. There's nothing in there. And so now we got to put the new back in. Well, the author said the new inventory was 15,840. Okay, you guys have it in the 12/5 tab here. You guys all have this. So let me go put that back in. 15,840. I'm going to go back to this yellow line. This is part B. 15,840 gets debited to the income summary line item. Sorry, the merchandise inventory line item. And the credit is going to go on the income summary. 15,840. Here's something I want to point out right now while we're on it. Income summary is a temporary holding account that's used to hold numbers and eventually it gets closed out. This is the only account where we're going to carry both parts of that over to the adjusted trial balance. Every other line item, you'll only see one number in either the debit or the credit column. But income summary is going to be needed for calculating cost of goods sold. So right now, bring both of them over. And I would write yourself a note. In fact, I may even insert a line item so I can leave that note. So if you guys are familiar with Excel, you can go to there's lots of ways you could insert a line, but I'm going to use the insert tab and I'm going to insert a row and I'm going to put in here, do not net. Carry both parts over to the adjusted trial balance. So what I'm writing, in case it's hard to see, says do not net. Carry both parts over to the adjusted trial balance. This will be the only line item that has both a debit and a credit. So I'm going to do that right now while we're on that line item. Every single other line is going to have just one debit or credit. And the reason is, we talked about it last time, we need this in chapter 13 to calculate something called cost of goods sold. So again, let's back up. We are looking at this chapter from a 20,000 foot view. We're going through the adjustment process for a merchandiser. Part of that process is using this 10-column worksheet that we already know how to use. But now it's gotten bigger and longer because there's a lot more accounts that we've learned when we've learned about sales, purchasing, payroll, cash. We have a whole lot more in our vocabulary now. So this is an internal document that's used to pull together all the data and to give the owner a preview of what his financial statement is going to look like before he ever formally does that. So far, to help us out, I dropped the numbers for you in the trial balance column. Okay, you would need to know what the normal balance of an account is to get that first part right. And now what we're doing is putting our information that we learned at the last class to use now by filling this out on a worksheet form. And we just did the first two adjustments, two parts, take out the old, put in the new. So let me stop. See if you guys have any questions. I don't have a tutor in the room right now, so I can't see the chat area. If you guys happen to see a little chat fly by, let me know, those of you that are in the classroom. If you have to use the chat room because maybe you're at work and you can't talk because there's other people in your cubicle or something, I'll definitely go check that toward the end of class. And those of you that are in the Zoom, if you see a chat question, I would love it if you would just unmute yourself and pass that along. All right, not hearing any questions, let's go try letter C. Again, you guys have these on the previous tab. I just pulled them over so I wouldn't have to drive you crazy by scrolling too much. Okay, letter C says, during 2000X1, the firm had net credit sales of 160,000. Credit sales are the only ones that can go bad. Cash sales are cash. You don't have to worry about a bounce check or somebody not paying you. So they had net credit sales of 160,000. And the company estimates that 0.8%. And if you don't have a calculator that has a percentage on it, move the decimal place 2 to the left. So 0.8% would be 0.008. So all I'm going to do on this adjustment, I'm going to calculate 160,000 times 0.008. And we need to know where to put that. Okay, we just did that on the previous problem. So I'm looking for the uncollectible accounts expense. It's usually near the bottom. And I'm going to take 160,000 times 0.008. 160,000 times 0.008. And let's check ourselves and see what we come up with. I got 1280. Anybody else get that? 1,280. We have our debit. The credit is to that funky allowance account. It's going to be right below accounts receivable. It's a contra account, and it's used to pull accounts receivable down to its net realizable value. So I'm going to scroll up until I see accounts receivable. Right below it, we'll see that allowance account. I'm going to put in letter C in the skinny column. And because I can't remember the amount, I'm going to put equals and I'm going to go grab it. Okay, so what did we do? CEOs, CFOs hate this. It directly impacts profit sharing bonuses because it puts an estimated expense on the income statement in the same year as the sale, because that's what GAAP mandates we do. There's 3 generally accepted methods for doing this. We're learning the easiest one of the 3, called the percentage of sales. When you guys take Accounting 101, I hope next semester or in the fall, you'll learn 3 methods, 3 GAAP acceptable methods for doing that. Questions on letters A through C? Okay, D says, on December 31st, an inventory, that's important. That tells you how much of the supplies were left. Remember what we're after, and the author makes our life difficult because he goes back and forth with the wording. He tells us that there were 245 of supplies on hand. So go find the supplies account. I'm going to highlight it in a different color so your eyes are on where I'm talking about. I'll put it in green. Right now, there's 750. And what they told us was that it was 245. So here's our calculation here. I'm going to take the difference between the 750 and 245. That must be the amount they used up. So somebody check. I got 505. Hope that's right. And the offset, the supplies is going down. Where should I put the debit? That's a cost of doing business. That's the definition of an expense. So we're looking down at the bottom for something called supplies expense. Probably see it near the bottom. There it is. Carry over that 505 that we just computed. Okay, so again, if you missed it, I'm going to post the file later, but we debited supplies expense and we credited supplies for $505. How did we get the $505? We took what was in the supplies account now, which is 750, and we subtracted out the 245 that should be in there. And to make sure that's right, if you want to do the math across on this right now, you can. When I take 750 and I subtract out the 505, when I do the horizontal math in a moment, it's going to be 245. That tells you that you did it correctly. We'll do the horizontal math in a moment for the rest of the accounts. We got to get through the adjustments first. Good news is, if you felt comfortable with the worksheet in Chapter 5, you should feel comfortable with the mechanics of the worksheet now. The bad news is, if you struggled and you just couldn't get that thing to balance and it was like pulling hair out of your head and so forth, you're going to struggle with the same thing because the mechanics are still the same. It's the accounting's gotten harder because we've learned a whole lot more than we do in Chapter 5. So as I mentioned to you, your author saved all of these adjustments for the end of the semester when you guys are really tired and you're running on empty. I know a lot of us are. I know I'm taking a class right now and I feel that way. What I would prefer for him to do is to move some of these back into Chapter 5, make Chapter 5 a little bit more difficult and ease up when we're all tired at the end of the semester. All right. Letter E says on, I think that says July 1st, the firm purchased a 1-year insurance policy for $2,400. Okay, well, go find that. That would be in a prepaid account. Here it is. I'm going to make it a different color so it stands out. We'll make it a bluish. And he bought it on July 1st. Here's our how much has been July, August, September, October, November, December. I get 6 months used up. So 6/12 of that would be half. Half of it's gone. 6 months are used up. So I'm going to take $1,200 out of the prepaid and put it into an expense. What kind of expense? Well, this was insurance. So I'm going to use insurance expense. I'm going to go down to the expenses, find insurance expense, and pop that in there. Okay, how'd I get that? They said they bought it in July, August, September, October, November, December. I got 6 fingers in the air. 6 months out of the 12 months are used up. Okay, that's not a new one. Questions on A through E. All right. Letter F. 3 years ago, the firm purchased store equipment for $6,000. You can go see that in the store equipment account. The equipment was estimated to have a 5-year useful life, and then it got cut off. So we'll have to go see what the salvage value is. Let me see if I have this one. I think I captured it, 12.5B. Let's go down here and we'll see what the salvage value was because it cut it off on that slider bar. Here's 12.5B. What letter was that, guys? They're sitting in the class. Was that F?
F, yeah.
Okay, thank you. Here's F. The equipment had a 5-year life and a salvage value of $1,000. Okay, that was the part that got cut off. So we're going to have to go calculate depreciation on that one. So what we're going to do is take 6,000 minus 1,000. Okay, that's 5,000 divided by 5 years. Looks like it's going to be $1,000 a year. So let's go put that in. On our worksheet, I'm going to go down to depreciation expense. It's going to be down by the expenses here. And I'm going to calculate it. This was for equipment. So it's the cost of 6,000 minus the salvage value of 1,000. And remember, they bought this a couple years ago, so they've had it all year. And we're going to divide that by 5 because it said it was a 5-year life. When you do that in your head, 5,000 on the top, 5 on the bottom, that's going to be the $1,000 a year. And that's what I got when I did it. Depreciation expense, and the offset is going to go to accumulated depreciation. That contra account that we learned about in chapter 5. Here's that $1,000, the offset. So we debited depreciation expense. Oh, except I got it in the wrong column. I think I need that up in the store equipment. So didn't realize there were 2 assets. So give me a second to fix that. It is equipment. I had it on the wrong line item. It is equipment, store equipment. And let's go look at G. G talks about another item that the company purchased. 3 years ago, the firm purchased store fixtures this time for $15,760. So they bought it a couple years ago. So they've had it all year. At the time of the purchase, the fixtures were assumed to have, and this is again, because of the way the author formats it, I couldn't copy it all over. Grab your book. We'll go look here. It has a life of 7 years and a salvage value. Did it get cut off here? Oh, your picture, your faces are annoying. Give me a second. Of $1,410. Okay, the salvage value is $1,410. and it was a life of 7. 15,760 minus 1410. 15,760 minus 1410. 15,760. You guys are in the class and you remembered what that was? I gotta have a copy of that.
Yeah, 15,760.
Okay, and what was the salvage value?
1410.
Thank you. 1410. I think it was a 7-year life. Okay. So there's the formula. Again, I'll post the file if you fall behind. And I think I'm going to get 2,050 when I do that. Let's see. Yes. 2,050. So if you missed it, the cost minus the salvage value divided by the life. You guys have the same ebook that I have, so you can go look it up when it gets cut off. And the credit is going to be for the same amount to accumulated depreciation for the fixtures. Questions on letter A through G, or something you need explained again, or something maybe that you didn't see the first time, just unmute yourself and ask away. All right. Letter H, this is the one that we just did one, like on the previous problem that we didn't finish. On October 1st, that's going to be an important date. The firm issued a 6-month $4,000 note. If you go to notes payable, you'll see the 4,000 in there. So that $4,000 note has interest payable at 9%. So we're going to do principal times rate times time. We got the principal, 4,000. We got the rate, 9%. What everybody messes up is the time. They want to use the 6 months that the author gives you. That's not relevant. What's relevant is how much time has passed since you signed it. I'm going to get my fingers out. October, November, December. 3 months have passed. So my formula on that for my interest expense, which is usually the last account, 4,000 times 9% times 3/12. That's where everybody messes up. Why 12? That 9% is an annual rate. So the time that is passed is October, November, December. 3 out of the 12 months have passed. When I do that, I get $90. Anybody else? Okay, that's letter H. And interest payable is the offset. So I'm going to go up to the payables and find interest payable and put that $90 in there. All right, let's go back to this then. We'll scroll over here. Let's see where we are. We just did H, so we're at I. At year end, the employers owed $1,450 of wages that won't be paid until January. So there's that payroll where part of it falls in this fiscal year and part of it falls in the next fiscal year. He gave it to us. He said $1,450. So I'm going to go find my wages expense or salaries expense, and I'm going to go put that in there. Go over here. Salaries expense, $1,450. And the offset is going to be salaries payable because you owe them that money at 12/31. So I'm going to go up to my liabilities and I'm going to find salaries payable for $1,450. Here it is. That's letter I. And the last thing we have to know, and you guys know this because you've all worked at one point, what goes hand in hand with wages are those rascally taxes. If we earn money, we've got to pay taxes. For some reason, your author separated out the taxes into 2 letters. I would have done them all in one, but he separated them out. And he gave you, it looks like percentages, and he's gonna make you figure out what the taxes are. So because that kind of got cut off, I'm gonna go make sure that that is the case. I'm gonna go look at the book here. And it says the firm owed Social Security taxes on the entire 1450. That's the part that got cut off. And they also owed unemployment taxes on the full 1450. And he gave us the rates, just like I'm going to give you the rates. So 6.2 we're used to seeing for Social Security. Medicare is what we're used to seeing. 0.6 for FUTA, I think we're used to seeing that. And then he changed the SUTA rate to 5%. So basically what we need to do is recall what we did in the payroll chapters and do the same thing on our worksheet. So I'm going to move over here and I'm going to go find one big line item to payroll tax expense right here. And I'm going to do both letters J and K together. And I don't know what those 4 taxes are going to total. So I'm going to put a big green box here. And how am I going to get that green box? I'm going to go figure out the taxes, those 4 payroll taxes that he just went through with us. And these are all liabilities, just like they were in chapters 10 and 11. So I'm going to scroll up to the liabilities accounts. And here they are. And we're going to go calculate these. He gave you the Social Security and Medicare rate in J. And he gave us the FUTA and SUTA rate in K. All right, so 1450 was the amount of the wages times 6.2%. Would give us the Social Security. I'll do it in a second, but I would really love it if someone would, since I don't have a tutor in the room, if somebody would do it and make sure that I didn't put anything in wrong. I got 89.90. Okay, thank you. And then for Medicare, 1450 times the 1.45% is going to be our calculation. If you don't have a percentage key, move the decimal 2 to the left, 0.0145. I got 2103. That may be the case. Yes. What'd you get?
0.025.
Okay, so it will round it up to the nearest penny. So one of the students in the class was saying 21.025, which is the actual number. If that third number is 5 or higher, we round it up. And if it's less than 4, we round it down. So great point. The FUTA was 0.6, so 1450 times 0.006, because it was 0.6%. I got $8.70. Okay. And SUTA was the 1450 in wages times the 5% he used. That is not a California rate. So we'll use the rate he gave us, 5%. And I got 72.50. So when I add those 4 up, those 4 payroll taxes, the 89.90, the 2103, the 870, and the 72.50, that will give me that debit to payroll tax expense, that place where I put the big box at the bottom, this one here. So add up those 4 green numbers, and I got 192.13 when I did that. And if you're off by a penny, that's okay. It's because of that rounding issue. We made it through the adjustments. The harder part of this chapter are calculating those adjustments. Now we got to finish off this worksheet. Remember what the owner wants to see. If you're the owner of this company, you want to know, was I profitable, right? Did I make enough money to cover my expenses? So this worksheet is going to tell us that, and it's going to give us a glimpse into what the financial statements are going to look like when we're done. So any questions on any adjustments that you saw, A through, I think we went through J. All right, then here's where you're likely to make a math mistake. And again, If you fall behind or we go too fast, I'm gonna post this, so you'll have it at the end of class. So cash didn't change. Remember what the adjusted trial balance says, it's horizontal math. It's just adding across and it's giving us new balances. So cash didn't change, bring it over, still 32.35. By the way, adjusting entries never affect cash. Accounts receivable didn't change at 69.10. Now you got to be careful because you have that funky new contra account that we learned about. And it did have a starting balance. It was 600 and we added 1280 to it. Move over to the credit column because it's a contra asset and add them up. So 600 on your calculator plus 1280 is 1880. Then we get back over to the merchandise inventory. Okay, I hope you guys can see on this worksheet that these two cancel each other out. This cancels this. So what we're left with is the 15,840. These cancel. So we're left in inventory with 15,840. 15,840. That's the ending inventory. That's what it should be. Supplies we added across when we first did it, and we got the correct 245 that they said was on hand. Prepaids went from 2,400 with a credit of 1,200, meaning we have 1,200 left. That still represents something of value. Those are the other months that we don't have to pay the insurance for. The equipment didn't change. The cost is still 6,000. Then we got to be careful because here we go with another funky contra account. All these assets normally have debits, and here's one with a credit balance. So move over to the credit column. 3,000. Store fixtures didn't change. Just bring it over. Another funky contra account, so be really careful. Go over to the credit side and add them up. 14,100 plus 2,050. I got 6,150. Anybody else? You guys are keeping up? Yeah, good. All right, the note didn't change. We still owe 4,000. The accounts payable didn't change. We still owe 600. And all these payroll taxes now have adjustments to them. So be really careful. So does the interest. Be really careful that you 90 carried over. And then we have those four taxes that we just worked on. 89.90, 2103, 870. And we're hoping, and especially me that has a little bit of dyslexia going on, we're hoping that we don't make any transposition errors. We'll know when we're done because when I flip this puppy, the debits have to equal the credits. We'll know. So I'm continuing down. I'm in the liability section. Our salaries payable represents the money that we owed our employees on 12/31. Our capital didn't change, carry it over. Our drawing, be careful, those contra accounts are the ones that get you. The drawing account has a debit balance. You have all these credits. Be really careful that you move over to the debit side when you get to the drawing. 8,000. Finally, we're to the revenue accounts. We're done with the assets, done with the liabilities, done with the equity accounts. Now we start in with the income statement account. Sales didn't change, bring it over. Then be careful, another contra account. Life was good when we had one contra account, it was drawing. Now, because our knowledge has increased, because we've had buying and selling transactions, we got a lot more contra accounts that we got to worry about. So 6,000. Our purchases didn't change, carry it over. And then a contra account. So move over to the other side, put that 2,000 in. We've already addressed income summary. A lot of you came late to class and may have missed that. I added in a line, this is the only account where you're going to see a debit and a credit. Why both of those are needed in cost of goods sold. So we wrote in a note, do not net. Carry both parts over to the adjusted trial balance. So all we have left to finish this off is to go through all those expenses, carrying over the number if it didn't change, like the rent and the telephone. And this, I'm just using cell references so I don't transpose numbers. And then we have two accounts that went up. Salaries went up. Payroll taxes went up because of those accruals that we did. And then we can go straight down, supplies, insurance, two kinds of depreciation, uncollectibles. I'm having trouble seeing that. I think that's 1280. I guess I'll find out at the bottom. And 90. And now comes the moment of truth. I don't expect you guys to take the time to add these up. I'll add them up for us. And when I sum this up from the top to the bottom, you've got to get numbers that balance out. And on your homework, if you don't balance, don't spend any more time than like 15 minutes trying to find your mistake. And email either the tutor or myself. We'll help you find them. They have a way of popping out to us because we're more experienced than a brand new accounting student. That has to match the other side. And it does. So I know I didn't make any silly transpositions that I'm famous for. Questions? The last part of the worksheet, just like we learned in chapter 5, I'm going to move these adjustments now. I don't think I need them anymore. Let's see if I can get rid of them. The last part of this worksheet is you got to decide, does it go to the income statement or does it go to the balance sheet? So it goes to one or the other, not both, right? So using color, balance sheet would be assets, liabilities, and equity. I'm going to use some colors to color code this to show you where these would go. All the blue would go to the balance sheet. Revenues and expenses are the only thing that go on the income statement with the exception of that income summary account. And I definitely want to show you that because that's new. So let me make this pink. I'm showing you where the correct placement would be. Okay, so someplace up at the top here, I would write a note to myself that the income statement is for revenue and expenses only. And everything else by default goes on the balance sheet. And by the way, income summary, we're going to carry both over again. So that's the first thing I'm going to do. So many people are going to miss that. Both of those get carried over to the income statement. It's going to be used in the next chapter to calculate something called cost of goods sold. So I'm going to write another note. Carry both over to the income statement. Personally, as a business owner, I always do the income statement first because I want to know, is my business profitable? So as soon as I fill in the pink information, as soon as I carry it over, I'll be able to flip this and answer the question, was I profitable? You know, when you're an owner and you're putting your hard-earned sweat equity into it, hopefully you're making a profit. If not, you know, why be in business if it's going to be long-term? So let's carry all these over. There's my sales. And if you guys want to carry it over with me, You can use Excel, just press the equal sign and go grab it and press enter. Press the equal sign, go grab it and press enter. Make sure that you watch those contra accounts. That's my Achilles heel. Those are the ones that get me. And I'm going to go grab that rent expense. Once you grab that first one, you can use the copy feature to just drag that reference down. Or you can enter them each individually. And here's the moment of truth. Okay, I'm hoping as a business owner, I'm hoping I have, $20,000 in profit for, this is for the year, so maybe I'll say 100,000. I'm hoping for 100,000 in profit to make it worth my while. So let's, again, I don't expect you guys to add all these during class time, but I'll use Excel to add them up. I'm going to add from the top to the bottom, again, from the very top, from the very first line item down to the last line item, all the way to where the pink ends, right there. And there's my expenses. I'm going to kind of put that in to remember. That's a summary of the expenses. Here's going to be a summary of the revenues. So I'm hoping for a big number. I'm going to copy this formula over just so you guys don't have to sit there watching me scroll. I was so upset with the author when he did this problem. And you can see why. I think after all that work, after spending probably an hour on this problem, what kind of a net income or a loss did we have? Barely enough to go out to lunch on, right? Because here's the revenues and here's the expenses. The difference between the two, I'll tell you in a second, a whopping $47. Okay, now how will I know if I've done that correctly? That same number, don't forget the principles of a worksheet, that same number must balance us out over here on the opposite side. So when I carry those balance sheet numbers over in another few minutes, I also better be off by 47.87. So let me balance this out. This is 254,400. And the same. And now I'm going to go back up to the blue part and finish this balance sheet out. And if I did it correctly, those debits and credits are going to be off by the same amount. And again, I'll post this after class because I know how hard it is to follow on a screen. Questions before I fill in? I left this part not blue. Any questions before I fill in those blue numbers? All right, I'm going to grab them. All the rest of the accounts go on the balance sheet: assets, liabilities, and equity accounts. And again, if you mess up at home, I hate hearing from students, I spent 2 hours looking for my mistake. No, spend 10 to 15 minutes and then email or drop by a tutor's office. If they can't help you, email it to me or send me an email saying, I don't know where I screwed up. Can you please help me? And of course, as long as it's not Sunday at 11 o'clock at night, I'll be happy to help you. So I'm just making sure I don't make any silly transposition errors as I copy these over. In the interest of your time, I'm going to grab this and pull it down until I get to that last contra account. I got to move back over to the debit column. And when I'm done, and I'm going to wait a second for anyone that wants to catch up, you can do it. When I add all those debits and credits up on the balance sheet, I better be off by the same 47.87. Let's go check. Use that formula I created and copy it across. And the moment of truth comes in when I take the difference between these two. Let's see. 47.87. It matches. That should give me high confidence that. I've done the mathematics, the horizontal adding across and the separating into income statement and balance sheet. Question always comes up from students. Where's the statement of owner's equity? Right? This is a worksheet. It's an internal tool used to pull together all the information. If we wanted to put the statement of owner's equity, it'd be another 2 columns long, and there's not a whole lot that goes on there. So by default, we just put those equity items on the balance sheet. And here we'll show that this balances out. Chapter 12 is no joke. It's a hard chapter. Do not wait until Sunday night at 10 o'clock or 11 o'clock to start this. Start it sooner than later so that you can get help if you need any help. The last thing I'll say is I know what's ahead in chapter 13. I know what's around the corner. I added financial statements on here. If you guys want to go back after chapter 13 and practice, I gave you guys the option to do that. So for right now, our focus is on the worksheet. And I want to leave you with one last reminder. Hope you guys know the answer to this. The only way you get transactions into the accounting system is through the journal entry process. So the last thing that we would have to do is take all these adjustments here, the hardest part of this, all those adjustments, and we would go have to journalize them. We'd have to put them in the journal to actually get them into the accounting system. But right now we have a document that will show the owner, you didn't do so great, unless you guys think $47 is enough for a whole year. I don't. I mean, again, that if I took this class out to lunch, that wouldn't even be enough to cover 3 of our lunches. Barely anything. So, you know, something has to happen and the owner needs to take a deep look into, hey, why am I, after 12 months of working super hard, only have $47 to show for it? And either need to look for a way to increase the revenues or do some cost cutting measures, or hopefully both. And those are some of the managerial questions that you'll learn to ask yourself in accounting 102. Let me stop. I will post this shortly after class. Do you guys have any questions on the schedule, the final, the chapter, any kind of school events? Yeah, it's a good question. Somebody in your class asked, is the final cumulative? The answer is no. It covers the last 4 chapters, but if you don't know that assets have debit balances, or if you don't know the accounting equation, you're not going to do well. So no, it's not covering all the chapters, but accounting kind of by its nature is sequential. So if you struggled in the first part, you're probably going to struggle in the second part.